Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points.
In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing and how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. Every time that the market tested this zone, it got rejected to the upside quite aggressively. And we can notice how at the moment the market is testing the exact same area once again. Therefore, there is a good probability of seeing at least some short-term bullish price action being created away from the zone, since the market is supposed to be experiencing some buying pressure at this level, as already happened in the past. That is definitely a possibility. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how clearly the market is at the moment in a downtrend. We have seen the creation of already two weekly lower lows and lower highs. We can notice how we had the first high here, then we had a lower high here, and at the same time we had the first low here that broke below the previous one, and now we had yet another lower low. So when you have a downtrend, so the creation of lower lows and lower highs, what you essentially expect is for the market to move, creating a series of impulses and corrections along the way. Now, since the last move was an impulse to the downside, the next logical step would be to first see a correction and then to see more potential bearish continuation. So in a situation like this, there is definitely the possibility of seeing slightly more bullish price action and then a potential rejection to the downside away from this level. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, what we can notice is that we are having the creation of a W formation from a daily perspective. We had first an impulse to the downside, then a correction, then the market tried following lower. However, it failed going lower, and at the moment is continuing to the upside. Now, this creates a W formation. Now, when there is such a pattern, there's an increased probability of seeing a potential rejection to the downside and completion at the neckline. It's not every time, but in my experience, when there is such pattern, there is then an increased probability of seeing a push lower. We can see, for example, this W formation here. After that, we had the rejection to the downside, completing the pattern at the neckline. So if the market here will follow through with the push to the upside, that would create a W formation at that point, further increasing the probabilities of a potential push lower. We can also notice that this area is also quite strong supply and resistance, since it was previous support, which is now turned resistance here. So if the market here will continue with a push to the upside, that would increase the probability of seeing then a potential rejection to the downside, completing this daily W formation. Now, also, this zone here on the weekly is resistance. It is the lower high scenario in the case of this weekly downtrend, as we have just identified. In fact, since we have this impulse, if we want to measure this correction, we have to take our Fibonacci from the high to low of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements that are currently lining up at this area, and the 0.32, which is currently being tested as we speak. So all this area is quite strong resistance. So if the market will essentially raise inside of the zone, there is an increased probability then of seeing a potential push lower. Now, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the euro, we can see how with the last reports, net positions have been massively decreased. We went from having 100k net positions on EURUSD all the way down to having minus 42.5k net positions. Now, if we're looking at the data for the euro, it is important to keep in mind that we are already looking at EURUSD because all currencies on the spot are traded against the USD. So this means that institutions have been shorting aggressively EURUSD, adding 29.4k shorts just with the last report and closing 5,600 longs just with the last report. So clearly institutions are quite bearish at the moment on EURUSD. So if the market will raise into this area, there is an increased probability of seeing even more shorting, potentially pushing the price lower and completing this W formation. So if the market will create this W, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, if the market will actually create this W formation, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames. So 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market at that point, I wouldn't be surprised to see a potential push lower, completing this W formation. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses. So 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and you're becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard.
If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I'll see you in my next breakdown.